All right, y'all. Welcome back to another Thursday and another episode of the Triple Profit Podcast, the soon to be number one small business podcast in the world, Craig. All right. With me today, with me today is my brother Tavante, the guru. Say what's
What's
up,
going on,
Tavante.
JD? Nice to see you again.
You too, brother. You too. As y'all can kind of see, we are missing one of our brothers. One of the prophets is gone today. It is Marcus's birthday. He is out celebrating with family, enjoying himself, getting a little bit older.
Yeah.
Shoot. So he chilling. We gave him the day off, and me and Devontae said we're gonna go ahead and run this thing today. So today, you guys, we want to talk to you about the power of credit and how to help you eliminate that fear of using other people's money. All right. So Tavante, you want to go ahead and kind of kick it off?
Yeah. So the title of today's show was Power Credit and Getting Over Fear. I think in order to the intention today was to really talk about how much power we're missing by not using credit the proper way. So we talked about this, and we talked about, okay, people not understanding how much they can do by leveraging power, by leveraging credit, which can be a sense of power. But then also, we're talking about also, man, there's some fears associated with using credit that have to be addressed too. And that's hence why we add the second part, that the getting over the fear of using OPM, other people's money.
Right on.
So let's first talk about, it's same kind of dumb, but we got to define credit too, because there's so many many types of credit that people can use, right?
Right.
So everything from like the readily accessible types of credit to ones that take some time. You got to run a business. You got to have some financial documents in order to get these types of credit lines. So we could talking about everything from credit cards, pretty easy to get, if you got a pretty good credit score, right? Especially when you're young and you just getting all kind of credit applications sent to you, but as your credit increases, you will see you get like all kinds of mail. I got some right here. I always get them. Okay. That's actually, it looks like trash. This is money right here, So as you start to wrap your head around the idea of credit, you start to not see that mail as, are they trying to get me to be in debt? You start to see it as options. So that's credit cards. You got some personal lines of credit at your local bank. You got some HELOCs and some home equity lines of credit. You get into your business. Those are the kind of consumer things. You get into your business credit, and you got business line of credit, and then you got a whole like equipment financing types of credit. You got transportation or vehicle financing. Got all these other types of tools of financing as types of credit. But where I think the rubber meets the road, JD, is you were saying earlier about how people use credit for personal stuff versus, looking at it as a tool. Want to talk about that for a little bit?
Oh yeah, no, definitely, man. And that was kind of one of the things that helped, trigger me when me and Marcus were talking earlier in the week. So Marcus, who was out celebrating his birthday right now, we were having a great conversation because he bought about $200,000 worth of vehicles by putting $500 down out of pocket. Okay, so Marcus is expanding his appliance repair business into another city, and to do that, he had to have more vehicles. And so he was able to go down because, it's a shortage down there in everything right now. And so he needed to have some mini SUVs ready to go for his 3 new employees he just hired. So he went down and was able to not only sign up and get the 3 new vehicles for his current employees, but the future date the 3 extra vehicles when he expands to another city. And that got me thinking, like, dude, that is the perfect example of using credit to create an asset versus a liability. Okay. A lot of times people will brag about getting their credit up to 780, 700, 800, whatever the case may be. And they're going, you know, so they can go get that new Mercedes or go get, you know, whatever, that new Birkin bag, you know, take that trip, whatever the case may be. And don't get me wrong. It's nothing wrong with treating yourself if you've worked hard.
No, nothing wrong with it at all.
Nothing wrong with that. But I think there's a psyche we have around it, and it goes hand in hand with what you were talking about, Devontae, along with fear. I think we have the psyche that when we get credit, we think credit can be bad, and this thing that makes us nervous is because we aren't looking at using it right. Whereas, like, perfect, what Marcus is doing, that's an investment. That's going to instantly bring him in money. And those vehicles are going to pay for themselves as those workers go out and do jobs for their appliance company. Okay. And I think that's a big thing. It is so weird because the discipline and psyche of having good credit go hand in hand with building and creating versus having a fear and a bad psyche around credit and putting yourself in the hole.
Yeah,
you know?
that's it. That's it. I think an even worse predicament is just to get the credit score, just so you can say I have a good credit score.
Right.
Like, what are you doing with that credit score? You got a 800, but what are you actually doing with that credit score? You know, it's like you really don't need an 800. You don't really need 800. I mean, it's good to have an 800. I'm saying if you can have an 800 and you can also do what we're talking about as far as looking at this as a tool to leverage, that's really, really good. But if you got like a 750, 700, you know, and sometimes in cases, you don't even need that. You can get by on 600, but you got other things that are working on your behalf to support your profile. So credit is one, your credit score is one part of your profile when you're going to get a loan. But they also look at your history and look at what kind of types of loans you've managed in the past. They're looking at your revenue, the income, your income. They're looking at a lot of things. They're looking at, you know, a thing over history, you know. So it's not just like, I got a good credit score, I'm ready to go. You can have a great credit score and have no money coming in, and you still, you know, and not the best predicament. And you can have a horrible credit score, but you got like assets and you got things moving. You got a lot of things on your working for you. That's going to help your profile out. So having a credit score, a good credit score alone, is not going to seal the deal. You know.
See, and I think that's great. You're pointing out the aspects that I think a lot of people don't know because you're not taught that. There's all these other incremental things that go along with having good credit. And if you're getting to a space, which I know a lot of our viewers are people that are looking to either build a business, have a business, or expand a business. Yeah. These are things that you need to know and figure out, because these are the additional things that someone that works at a financial institution is going to look at when they're making the decision to hand over $100,000 check. Right. And if you don't know this, you know, you're going to kind of be behind the 8 ball. So no, go ahead, Tavante, explain some more of those things you're talking about, like that, go into that.
So, I mean, let's look at a scenario. Say a person they got an 800 credit score. Okay, but maybe you don't have a lot of money coming in. Maybe you're an employee. You're trying to start a business. You're still working for someone. You're trying to start your own business, but you're not bringing enough revenue. That alone could hurt you. But say, for instance, you got an option to leverage some credit, and maybe leveraging the credit is going to bring your credit score down. But the option too is that when you're leveraging this credit score, you've done the homework. You've done the homework to know that if you were to make this move and leveraging this credit, that it will allow you to bring in X amount of revenue. right? Okay. And so it brings your credit score down to a 700, but now you're bringing in $14,000-$15,000 a month, right? So your credit score is lower, but the revenue you're bringing in is a whole lot greater. So now the banks is thinking about, does this person have the ability to pay back what they have pulled out, right? And they want to, you want to be able to get more money, right? Because it's always to think about having more money before you actually need the money. You know, that's the name of the game. You want to have access to money before you need it, because things happen and you want to have the money. So they're going to look at, okay, they got a house, they got to pay their mortgage, they got to pay their bills. They're looking at, what's the likelihood this person's going to have the money to pay me back if I loan them the money, right? Mm-hmm. And so you got a good credit score in the first scenario, but you don't have a lot of money coming in. You're not a good candidate for getting any more money. Your credit score is great, but the money you're bringing in is not substantial enough to absorb all your debts, right? But on the second scenario, your credit score is not horrible, but it's dropped a little bit because you chose to leverage some debt. But now your income is greater, so now you have the potential to absorb just not only your personal debts, but also the debts that you're incurring to leverage your business, right? So I think it's just looking at it holistically. I think we went to public school. My teachers call us public school Paul and Patty, and it's always we just kind of rule based. Don't do this, never do this. But when you get into business and you become an entrepreneur, you got to look at the world at this world as options. If I use this options, what are the pros and cons? If I use this option, what are the pros and cons? How can I put these options together to use both these options? How can I weigh out and balance out this thing, credit, and also debt? Also, so how can I weigh these things out so I'm also pretty much I'm going to be in a good position? If I'm lacking in the credit score area, what other things do I have to bolster my application, my profile?
Trying to balance it out.
Try to balance it out, So credit score alone is a great thing, but when you want to go see someone to get a loan, it's gonna be more than that. That's gonna help you out. Time in business is another one. If you got 2+ years in business, that's a really, really great thing. Most businesses don't last that long. Ooh. So I mean that alone, but that's not something that you can you can just whip up tomorrow. You gotta be in the game. You gotta get that LLC. You gotta go get that done. You gotta make it official. Don't play with it and do it in your name. Go make it official. Go to get that LLC. And then that substantiates your business. Go get that business checking account. That substantiates your business, right? Start running revenue through your business checking account. That substantiates your business, right? That's going to start the documenting process that's showing that you have a record of revenue coming in, right? And then, work on that credit score too. Work on the credit score. Get that done too. But just looking at all these different things that's going to help your business profile, not just, I got this and now I'm good.
Right. And those some of those things you mentioned, the opening the LLC, the setting up the business account, all of those things, they aren't as hard as you think they are.
No, it's really easy. I could do an LLC in 15 minutes, literally.
Exactly.
15 minutes.
And I had a fear of doing it myself and figured it out. It was like you said, it did not take that long, and it's not that expensive either.
No, it's really not. It's not. Well, let's talk about fear. You talked about fear.
Yeah,
I think that's one of the things that stops us. This thing called debt, right? And we're always looking at this thing called debt as if it's like a kind of like this big ass metal ball over our head, looming over our head, but it's being held by the little flimsy string. And in any given moment, that thing can just fall and just bust us in the middle of the head, and we just gonna die.
Right.
And there, we may have talked about this in the previous shows, but I had to personally get over the fear of debt. You know, I was starting this thing trying to avoid debt. You know, that's the reason why we all want to be wealthy, right? We want to be wealthy because we want to be able to have access to money and never be in the red. We always want to be in the black. You know what I'm saying? But
I like a little quick shout out here. Yeah.
Right, right. We always want to be in the black, you know, and that's nothing wrong with that. But when you are afraid of something, you almost become magnetically attracted to it.
Mm-hmm.
And to like really release yourself from the reality of that being, you have to like recognize that this is what I had in my head. So I heard Rob Kiyosaki say, and I heard a lot of other people who are like gurus in business and millionaires and billionaires say, I'm up to debt in my eyeballs. And I was like, what? You got money. How you up to debt in your eyeballs?
Yeah.
You know, how are you? But the thing is, they have good debt. They have debt that they're leveraging and that they're making tons of money off of it. And that debt is cheaper. It's cheaper. It is safer for them to use that debt than to use their own personal money.
Right. Right.
It's just like the example you gave earlier with Marcus. He used $500 to get access to $200,000. You know, and we talk about the safety of that. You know, the safety of that is that if his business goes kaput, I mean, he could just file bankruptcy. You know, like, and it's done.
You get to start over.
Start all over.
Yep.
You start all over. Start another business. You know, and talk about the power of that is that his payment towards that debt is small, but his profitability that he's getting off of that is huge.
Exactly.
You know, and I'm not saying that no one should go. I mean, Marcus he knows what he's doing. You know, right. He's seasoned, he's experienced, he's made some mistakes, he's learned from mistakes, and he has the confidence to do that. So I'm not saying that you should jump and do that, but you can start on a small scale though. Definitely can start on a small scale, and you can make mistakes along the way, but that's okay. Yep. You know, that's okay. There's I had to get in my mind that when I'm in debt, that debt is not money I lost. I didn't lose that money. Because that's what we think. We think, oh, that money is like, it's gone. No, right. It's not. It's not. That money's not gone. That money is sitting in a holding place.
If you're doing it right, it's sitting in a holding place.
Well, you doing it right means you just don't stop doing it. You just don't stop doing it until you figure it out, because once you hit into the profit margins and you start learning that money gets sucked back out of the debt area, it's now in a profitability, you know. So just to give you a sneak peek, so we talked about a couple of shows. We talked about the idea of using your own banking. So we talked about what was it called again? We talked about
velocity banking.
We didn't talk about infinite banking. We talked about velocity banking.
Mm-hmm.
We got to do a show on that, but I use infinite banking. So infinite banking is so my debt right now, I got a lot of debt right now.
I saw how your eyes roll right real quick.
Yeah, but before I used to be so ashamed of that. You know, I was like, oh my God, I'm trying to be a business guy, and I'm like in debt. And the debt it got bigger. It got bigger when I really started to really get serious about this business. It got bigger. But the thing is that I love looking at my numbers because I know how much debt I have. Let's say I actually got more than this, but say I got 100,000 in debt, right?
Right.
That debt, someone will say, well, you owe that money, and when you pay it off, then it just, it's disappeared, and then you hit profitability right there, right? Well, when you get into like learning about infinite banking allows you to do is to recapture that debt and then turn it into profit.
Gotcha.
So let me explain that. So I'm basically what I'm doing when my company hits profitability, then I'm going to recapture that debt, and then I'm gonna pay myself back the payments I was paying to the debtor, but pay it to myself. So say I owe $100,000 to Wells Fargo. I don't have an account with Wells Fargo. I'm just using Wells Fargo, right? 100,000 Wells Fargo, and my payment to Wells Fargo on that $100,000 is $1,000 a month, right? Just numbers. My profitability allows me to, and using the strategies I know from infinite banking along with velocity banking, capture that debt really fast because it's velocity, right? So I capture it back. And then when I capture it back, I pay myself back the $1,000 a month. So I'm still in debt, but I'm in debt to myself now. I become the debtor. So if I was to pay Wells Fargo that $1,000 for a period of maybe like, say it was 10 years, right? Or whatever it is, the minimum payment on that for 10 years. Then what I'm doing is I'm going to pay myself back that plus some for the same period of time, as if it's like I never paid the debt off. The payments are just still flowing. They still flowing. Like I'm paying on my debts right now, because you got to be a good debtor.
Right.
If you want to be in business and you want to have access to money, you got to show the people that, hey, I'm trustworthy to take this money and pay it back. I always pay up my debts. I always pay my debts. I'm very serious about that. And so but I'm become a debtor to myself. And so now, if I was to continue to pay that debt off like Wells Fargo, I would have paid them back the principal plus the interest. But if I become a debtor myself, I pay myself back the principal plus the interest. So that money is not disappeared. I look at that money as like, man, when I pay that off, that 100,000 is going to turn into like 300,000, you know?
Right.
But it's going to be all mine.
Gotcha. Man, how couple things. One, how did you work on eliminating that fear? Was it something you came upon, or just a realization?
One is experience that you can't work on something if you're not doing it, right? So you can talk to people about, hey, how'd you do this? How you do this? And then if you don't really do it, then you don't really have that moment to like be in that period where you're afraid, like you gotta go through it. So I was like looking at people sending me mail, all the time. I'm like, I got all this damn debt. Then it was like, Savante, how are you going to move forward with that mindset? How? And I was telling my dad, I called my dad, I was like, Dad, I got to pay off this debt. My dad, he would react. He was like, but that is money, he didn't say it like that, but he would say small things to me. And even my dad, he's not even in the business, but he knows that like he's more spiritual. And I think that's how it helped me a whole lot, because when you look at nature, you can never destroy anything. Everything is just transfers from one thing to another, and then it comes back. So I was like, man, that debt is not gone. That's money kind of sitting in like a quasi space for me, like a holding place for me. And I proved to myself, like when I recapture my debt, that debt is going to turn into profit. But small things happen too, like on a job. You lose money sometimes, you're entrepreneur, you lose some money. And you say to yourself, man, like the first time I lost $400. I did some services, I lost $400. I wasn't getting the money back. Like that was like a hit to me. But I was like, man, how the hell are you going to lose $400 and you want to be a millionaire? Like what? You can't. Like millionaires, like they talk about losing like hundreds of thousands of dollars on deals.
Yeah, that's good.
Like,
yeah.
And it's like they laugh at it like, I just lost $100,000 just like that.
That's true.
But it's got to become that game for you. It's got to become this like I cannot mess this up. You know, so what if you lose 10 grand, 5 grand, 3 grand? What if you lose? What's gonna happen? Are you gonna die? Like what's gonna are you gonna figure it out? You're probably gonna figure it out. And you're gonna keep moving.
That's true. Steve Harvey said something like that, like every bad thing or worst thing possible that you thought that you went through, you've gotten through.
Yeah.
You figured it out. You figured it out at one point. Yeah. So I like that goes hand in hand with that.
Yeah.
Bet. How the second part was I know you mentioned it earlier about making sure you pay that debt and you pay yourself. Like where did that discipline come from? When did that click?
I think the discipline came so when you start, the first thing is for like people who want to start getting like access to real money, you know, like money, right? So if you've never saved $1,000, if you've never seen $1,000 in your savings account, like, do you really believe that you can make, you know, in your own business and have $10,000-$20,000 come in a month on in your business? You know, like you just think about that. You know, like you've never personally saved $1,000. You know, but once if you able to save $1,000, if you're able to save $5,000, $10,000, $20,000, what's going to happen is that the action of saving, and some people will say things like savers and losers. I think I still do think savers and losers. I do, but in order to get to the point where you are not afraid of being in debt and you can be disciplined with lots of money, saving is one of those things that you have to do. It's a great tool to build the mindset up. If you can save $1,000 and then save 2 and 3 and 4 and 5 and 10 and 15, your mindset is going to change because you're going to look at that money you saved up and you're not going to want to just blow it on stupid shit.
Right.
You know, but if you get access to $10,000-$20,000 on a credit card, there was no pain threshold acquired to like get that money. You know, and I don't believe in hard work, but there was no process you went through. There was no sequence of actions to say, I am building the discipline to put away some money until I see this. I'm building the practice of the consistency. I'm building the frequency of I am becoming this person by doing these actions. Not hard work, but doing something consistently to believe, the practice of believing I am a millionaire by saving money. You know what I'm saying?
Yeah.
That, you know, when you start seeing those numbers in your checking account, you're not gonna want to blow that shit on like you know, some Armani shoes or whatever. You can be like, no, this money needs to go somewhere where it can make more money for me. You know?
I like that. So that's really good. That's really good because anybody that's out there, even if you work in a standard 9 to 5, even if it's paying minimum wage, if you can start small, like you said, it ain't got to start with 1,000. It's almost like working. It's like working out. You start with the 5 pounds, and you lift that as many times as you can. You can't no more. And it's the same thing with the money. You put away $5, put away $10, put away 20, and just slowly put that money away. You'll slowly develop the discipline that's needed. That, like you said, some of these same millionaires or billionaires are using. They're just using it with a lot more zeros attached.
A lot more zeros.
That's a lot more zeros.
That's a lot more zeros. But when you're doing it that with like so when you're able to save $10,000-$15,000 in your checking account, your savings account, what's gonna happen? And then you're able to build discipline so you can see your cash flow be like $2,000-$3,000 a month. When it comes to like you messing around with $20,000, $30,000, $40,000, $50,000, $100,000, you know, like you're not gonna even think about it like that. Like I don't look at $1,000 like it's $1,000. I look at $1,000 like it's $10. You know, you start looking at 50 grand like it's like 5 grand. That's not a lot of money.
Right.
And it you know, like people, I walk around looking like this all the time. You know, like it's not about like it's not about show. You get over that. You get over that quickly because your focus is on like what you're building and the excitement and the fun that you're having about what you're building versus getting something to validate yourself. And then, like that's, you get over that, you start saving money, you spend a little bit and you get tired of spending and you're like, okay, I'm ready. I'm done over there. I want to build something, and you get serious about it. Well, not serious, like, because it's got to be fun always. It's got to be
right.
fun.
No, I understand.
It's got to be
intentional. Fun. You get intentional about it.
Yeah, focused. You get focused, and how you view money is just different. You view it differently.
Yeah. I like that. No, that's. I think that's freaking crazy because I totally agree with you. Like, I think once you start leveling up like that, and you start seeing more, you believe more in it, and then, like you said, that's when, $5,000 may seem untouchable to somebody.
Yeah.
But once you get it on a consistent basis, it's like, okay, this is like me having $500 before. You know what I mean? But it comes over time of doing it and eliminating that doubt that you can't get there.
Exactly. Exactly.
I love it, man. Sure. Did you when you start working on your credit and stuff, did you go through any programs or anything like that yourself?
Yeah, I did. I went through this one program that I was instructed for, 101 Financial. Shout out to anybody who's watching this, 101 Financial. It's a great program. I coached for them for a while, and they kind of opened up the idea of velocity banking before it was a thing. But it was, I mean, when I started that, it was just like, telling folks you can fly and no one has ever seen an airplane. It was like crazy, like going from putting away $400 a month to going away put $1,000 a month on a $30,000 salary. 30 grand. I was getting paid with 30 grand. It's putting away $1,000 a month.
Ooh, that is discipline like a bug right there.
But the thing was, people think, oh, you must have been like eating crackers. No.
Yeah. No,
I wasn't. It wasn't about discipline. It was about how they train you how to look at money. They just train you how to look at money differently. I didn't change anything about my lifestyle. Yeah, I just managed numbers a whole lot differently. Gosh. And that first 1,000 was like, what? Next 1,000 was like, oh my. Then you get used to it and you start, get more income, and my actions never changed, so my income got greater and my savings got greater. Started making $6 or $7 grand a month on the job. Start putting away $3-5 grand a month savings.
Half the yo.
I mean, we at that point I was married too, so that helped a lot too. But even on a $6 grand salary, $6 grand a month, I was putting away 3 stacks. So it was like, my mom asked me one day, she was like, "Boy, how much do you save a month?" I said 3,000. She was like, "What?"
No, you shocked mom, but it's real. It's real. Man.
He was like, "What?" But that progression though of seeing that every single month is how your mindset changed, because now your experience is not, I'm saving $100, I'm saving $200. No, I'm saving $3,000. So it start changing everything how you see things.
Gotcha.
So now when you get $30,000, you're like, oh, it's only 30 grand.
It's only 30 grand. I like the wordplay too. The wordplay goes with it. It's only 30 grand.
It's only 30 grand.
Yeah, it'll come back to me.
Right.
Yeah, I love it. Okay, no, perfect, man. Yeah, I know. I've been I've seen some of those different programs and stuff like that. I know I've been working on doing it. I did doing it myself, basically doing the letters and whatnot, building it up. And it worked over time, but it was kind of the same experience for me, like learning all the different the different levels that go with the credit, the different things that I'd have to show to really, really establish, have a full portfolio, really.
Yeah.
Have a full credit established portfolio to get access to some bigger money, you know?
Yeah.
So I could deal, because that's my thing. Like, and I had that, for me being fresh in business, I had that same damn fear. It was like, my mind was, I need to work harder so I can save up more money so I could put my own money into my business.
Mm-hmm.
You know what I mean? Versus looking at it, and that came along with, hanging with you guys, talking with Marcus, reading more about, what other business people were doing was, no, you can work on getting your credit up and using these other people's money to expedite your business. And I work in a business where if I can put some money up front, I can get that money back very rapidly if I'm doing it right.
Yeah.
I'm on my game and I'm very disciplined.
Yeah.
And that was something I had to learn to start to develop, and my mindset to trust myself that I'm good enough to get it done too.
Mm-hmm. Mm-hmm. That's key.
Yeah. So I had to really, really sit with that and build upon that and learn, like you said, start looking at what these other people that were successful doing. Like, even in my time, one of the brokers I was under before, he went in the hole his first year about 70 grand, like 70, 80 grand, just in advertising and marketing.
Yeah.
Just putting his name out there. And he put a nice dent in that, maybe cut into it about half that first year. But by the second year, all that was paid back, and he was doing what you were saying. Everything else was profit.
Yeah.
You know what I mean? And he hasn't had to look back since, but it was something that he had to really get comfortable with and say, I'm going all the way in here. I'm going all in. I'm trusting myself, and I'm gonna go ahead and do this, put this money up front and make sure it comes back to me.
Yeah.
And so I think that's definitely one, people have to understand when you're going into business for yourself, it's gonna be a fear there. It's gonna be, it's gonna be hard either way. It's gonna be hard. You guys just learn to choose your hard. You gotta learn to choose your hard. It's either gonna be hard watching somebody else do the business that you said you could do, or it's gonna be hard getting into it and figuring it out yourself. You know what I'm saying? Choose your hard.
That's good. That's good. That's good, JD. That's good. That's good. I've heard people say, that time is gonna pass regardless, and it's so true. Yeah. Whether you're doing it, time's gonna pass. Whether you're not doing it, time is gonna pass.
Yeah.
So,
like that. I like that.
Yeah.
Yeah, man. Shoot. But yeah, no, man. I think shoot. I didn't want to hold you up too long because you got to learn Espanol.
I think I missed my class, bro.
Did you miss your class? Oh, dang, man. I didn't.
Yeah. My instructor is real cool, so we'll tackle it another day.
Okay, man.
Yeah.
Man. Shoot, man. No, man. We'll go ahead and get wrapped up though, man. So you can see if you can at least email or get in there. But
yeah.
Hey, man. Hey, we appreciate y'all watching as always. We'll be back again next week, and our brothers should be back as well. But
happy birthday, Marcus.
Happy birthday, Marcus. We know you'll be watching this, probably helping edit it with Christian. But once again, thank you guys for your time, and we will be seeing you again soon on the Triple Profit Podcast.